Welcome traders. So today is July 6th and this is my daily recap. Now unfortunately today we had max size, max position, and max loss. So this is not going to be a good recap, but it's a very good learning experience and I'm going to tell you guys what I did right, what I did wrong, and how I plan on improving for the next time around. So I'm trying chart watchers right now to show you the charts. They are a little nicer than Trade Zero, but this is just a trial, so we'll see how this goes. Now, in the morning, we see a big push, 80 cents to about $1.40, and on this candle, it rejected pretty hard. I managed to get in on this little pop, so my average was about $1.14, and this was kind of my downfall. It was a starter size, and in hindsight, this was actually a really good entry because once this push from 80 cents to about $1.40 happened, I expected this stock to come back down to 80 cents. Now, with these sub $1 stocks, I always know, you always have to know that $1 is going to be support no matter what. So once it dipped below $1 to 95 cents, I actually had an exit and I was actually green on the day. So at this point, I was actually green about, I think it was about $500 to $600, and I didn't get out. I didn't get out because my initial thought was I want to see it break 90 cents and come back to where I started, about 80. It didn't happen. I managed to hold on to this, and when the market opened, you can kind of see it chopping around, but the most important thing that I missed was it was grinding higher very slowly, but it was grinding back up. And this was a very crucial mistake because instead of getting out, instead of exiting on the break or the dip below $1, I held on to it and I added to my position. Because it was only a starter size, I didn't I wanted to see what the stock would do. And because it was such a small size, I didn't really think too much into it. I don't want to say I wasn't paying attention because I was watching it, but I wasn't too concerned because the P&L was relatively small. And this was a very dangerous trap because regardless of what your position size is, you always have to look at the chart and try to understand what's going on. I mean, here you can see, and let me try this out. I think it's this thing here. You can kind of see that it's holding this ascending support, and it just kept holding and holding through the entire day. Now I'm gonna get rid of this, and you can kind of see there was no real exit. The only real exit was right here on this dip below $1.24 to $1.12. This dip happened so fast. I think it happened on about 400,000 shares, but this dip happened so fast there was no way for me to get out. Now, my average was $1.14. I added to my average. I actually added at pretty poor places. I added around $1.10, $1.12, and I even added a third of my position size at $1.05. Because again, my thinking was this was going to break down below $1, fade to 90 cents, and potentially get back down to about 70, 80 cents. That's what I was thinking. And, like I had about 10, 12,000 shares. I don't remember the exact number, but I had my max position size. 10, 12,000 shares, if I was squeezed from $1 to $1.55, I mean, that's $5,000 on a very slow grinding stock with no real chance for me to make back my money. So when you encounter these situations, when you realize that you're wrong and you are in with max position size, you have to respect your risk management. You have to be able to cut your losses. I did a subpar job today, and that's why I incurred a $2,000 loss. When I was in the morning, when I was watching this, I saw these pops, but honestly, I wasn't too concerned. The thing is, it was going up, but the volume was descending. You can kind of see this divergence here. I'm gonna just cover this chart right here. You can kind of see slowly grinding up, but the volume is declining. If the volume is declining, the stock is losing momentum. If it's losing momentum, there are no fresh buyers. If there's no fresh buyers and the stock is not fading and there's no volume, well, what happens? All the short sellers, everyone who piled in short, are stuck because it's not going down. And if it's not going down, it can only go up. And this is clearly what happened. It slowly grinded back up. It even tested these highs at $1.35, the pre-market highs. And this candle here was the writing on the wall. This candle here, I think it happened so fast that my entire screen froze for a second. And I never had a chance to exit at $1.12. My average for this stock was only at $1.12. So even at this point, I was down about 10-20 cents with 11,000 shares. I was down a couple $1,000s. I wasn't worried because it wasn't moving fast enough for me to say, hey, we're being short squeezed. But because it's slowly grinding up, it was equally just as dangerous and I missed it. But the important thing is, after this candle, I recognized that we are in deep trouble. Shorts are definitely getting squeezed and there's nowhere left for them to go. So once I saw this candle, I actually held on. I didn't exit because I need confirmation that I am actually in trouble. I have 11,000 shares. So 10 cents is $1,000. And when this candle formed, it held. And it must drop. It must consolidate a little bit or drop. But because it did not do any of those things, it actually pushed back towards the highs. I had to exit. I exited around this wick here. My average was from the 120s to 130s. And I was kind of disappointed in myself because the correct exit was after this candle, you must get out. It doesn't even matter what the situation is. If you're still stubborn, get out half, get out a third. And I didn't get out. And after this massive wick on 400,000 shares, it grinded back up to $1.36. And you can see what happens. It just hit $1.50s before it finally rolled over. And it didn't really roll over. It just came back down to $1.20, $1.30. It's consolidating here now. I fully expect this to fade, but because there's so much volume today, I'm not even confident it's going to fade. It probably will when the market's closed. This area here was so stuffed with algos, it was ridiculous. Shares are being whipped back and forth. And when you're trading with algos and you're being short squeezed, this is when panic really sets in. I was very fortunate that I managed to get out before the real squeeze. But if you ever stuck in a position like this, where you realize that the stock is slow grinding, it's going up, it's going against you slowly, you have to get out. Different traders have different mentalities. For me, I don't have hard risk. I don't set, let's say, I mean, in this situation, $1.22 probably should have been my hard risk level, but I don't generally set a very hard risk just because I like to read the level 2 and understand what's going on. My biggest weakness is dealing with slow grinding stocks because they will slowly whip you out and you don't even know. You don't feel it. It's like death by 1,000 cuts. It slowly grinds up, $1.30, comes all the way back down to $1.16. Now my average is $1.12. $1.16, $1.20, this is definitely within my risk tolerance. Now it pushes a new high at $1.35, comes back down to $1.20s. So you're down, but it's not enough to let the panic set in. You're down, but because I didn't have a hard risk level, I was never really that concerned with getting short squeezed. This was definitely a short squeeze, but it wasn't your typical low flow penny stock short squeeze where it just whips up like crazy. And you can kind of see on the daily chart, I mean, this thing is in a massive downtrend too. There's a massive consolidation, the $1 to about $1.15 level. And, this was what I was going for, that it wouldn't break. But, I mean, it broke. And this consolidation, I know I'm getting sidetracked a little bit, but this consolidation, although it's a really long consolidation, and I know you're going to say there's no volume attached to it. That is true. There's no volume on this consolidation, but it is still a consolidation. And traders are going to look at that because there's still volume being traded here where people are going to assess that this is where the fair price of Lucy is. So dollar to $1.15. And when this broke, I mean, you can see there was so much volume today. I tried to break back down and it didn't work. So this is my actual P&L for the day. I trade 11,000 shares, 22,000 total. We're going to look at my close positions. This is all real stats. Average $1.12, average exit $1.29. Stock right now $1.27. Holding VWAP. So these are all real trades. Everything I'm telling you is what I saw, all the mistakes I made. And I know looking back at this, it really hurts that I didn't respect my risk management, but I'm very grateful I didn't get squeezed at $1.50. So if my average was $1.12, to get squeezed at $1.57 is 45 cents. 11,000 shares is $4,950, $5,000. I would have been down $5,000. And when you're trading stuff like this, it's very important to respect your risk management. And if you don't have it, don't trade. It's really that simple. Like, trading is not hard. You're sitting there, you're clicking buttons. But the hardest thing in trading is to understand when you are wrong. If you can accept your loss, then you're in business. If you cannot and you are having a hard time, sometimes I struggle with this. It's not easy. The hardest part in trading is not making money, is when to take a loss. Because although exiting at $1.29 average is still a good exit, all things considered, it's going red 1900 definitely sucks, but it's a number that I am comfortable with, that I can recover from. It won't put me in a downward spiral where I'll start revenge trading, because when that happens, it gets very dangerous. So that's kind of my recap for today. I mean, it really sucks. And looking back at the chart, you can see that it was hugging this 20 moving average. It wasn't moving. It was just holding and holding and holding. And when it finally cracked, it cracked not even that hard, really. It went from $1.50 to, it held VWAP $1.28. It's still holding $1.27, $1.28, $1.29. It's still holding this range. I'm just going to call it $1.30s because there are too many shares and too many people who are still in this stock. So you can see 182 million shares, 3:16 p.m. Day's not over. I expect this to fade, but it is not going to fade during real-time market hours because there's too much volume. It's much easier for short sellers or people who want to sell this and dump this. It's much easier for them to do it after the market closes. So when the market closes, I probably expect this to fade into the 110, 120 range. Maybe even lower. I don't think so. This is very reminiscent of my big loss from 2 weeks ago, SKYQ. And it is what it is. I'm sitting here and I know I feel really bummed out making this recap, but it's important that we learn from it. I mean, this stock had no range for you to get in or out. The slow grinding was so nasty that for me, I had a really hard time reading it because every time it looked like it was coming down, people who were stuck was buying back up. Every time it made a push, it got sold right back into it. So I remember this range here. I actually considered re-entering, but man, this range was so choppy. Every time I saw $1.36 to $1.40, I thought about shorting it. But as soon as before I even executed or even try to borrow shares or get my order ready, it flushed right back down to $1.32, $1.30, and then right back up, and then right back down. And when it finally broke and it squeezed to $1.55, I mean, I just didn't want to touch it. This area here was filled with so much chop. Like you can see it broke to $1.55 down to $1.45. It did this like for a solid 30 minutes or so. And it did it during lunch hour. So usually during lunch hours you do have lower volume, but you can see the highest volume in the day was on this candle, 5.5 million shares. Aside from the opening bell, this is the same thing, 5.5 million shares. But yeah, I mean, we are we're red today, but we're still alive. We're gonna come back tomorrow morning strong, trade, and just try not to let this red day impact us too much. Because looking at my exit at $1.29, you can kind of see the chop here. It's been hovering between $1.26 and $1.30, and we got out at $1.29. Ticker still $1.29 by $1.30. So, and we avoided this massive chop. It would have been better, of course, if we took profit, walked away with $500-$600 in the morning on our starter size. I think we had about 3,000 shares, $1.14, exiting at like 98 cents, maybe 16 cents, $480 roughly. That would have been nice, but we had a thesis, we had a plan. It was wrong. We executed the plan. We took our loss, and that's what trading is all about sometimes. You have to take the good with the bad. Today was bad, and we're not going to let this affect us too much. We're definitely down, but it's not over. I think I'm about break even on the month. Let me see if I can pull it up quickly. So this is my trading journal. On the month, I'm green about 1,800. So after today, I'm right about 1,900. So we're break even on the month, less commissions, of course. But it's important to know, and it's important not to get too down on ourselves. We have a very high win rate, and sometimes these losses will happen. So that's it. I mean, that's my recap for today. I hope you guys learned something, and I hope you guys do better. Do better than me. I mean, I'm pretty bummed out because not because of the loss. I mean, the loss hurts. I'm more bummed out because I didn't exit on this candle. I was holding and hoping, and I still got out, but the exit in the process is what hurts the most. I care more about doing the right thing rather than the numbers, because this number here is not enough to set me in a downward spiral to start revenge trading. But if you can master your own emotions and your trading, and you can come up with bigger size, you'll never have to worry about the numbers. It's always the process, because if you get the process right, you can always scale up. But even if you make money and the process is wrong, eventually one of these bad days will wipe you out. And that's really the most important thing in trading. It's staying alive, staying in the game. Don't get whipped out. Don't blow up your account. And that's it. That's all it really comes down to. And even right now, as you can see, this is so bad. The VWAP in the 20, when you see this curl is usually something dangerous if it doesn't get back below this $1.28. And it's been consolidating in this range for quite some time already. So I'm not sure what's gonna happen. I'm sure it's gonna fade eventually, but we're out, we're red, and we survived. So that's all for now. Thank you guys for listening, and I'll see you guys in the next video.